Hello, everybody. I hope everybody's doing well. I just want to apologize. I have been so busy doing my business stuff and a bunch of other stuff that I have not kept up on my trading stuff. So I know I've kind of neglected my channel here. So I want to apologize to everybody if you guys were following me. But I just want to give a quick analysis of the markets, what I think is going on. Again, just want to point this out that um, the disclaimer is that this is no investment advice. The information provided in this video and website and live stream does not constitute as investment advice, financial advice, trading advice, or any other sort of advice and should not treat any other videos and website content as such. I mean, Chains Capital and Moonrock Coin do not recommend any cryptocurrencies or any other assets that are mentioned should not be bought, sold, or held by the viewer or listener. Do conduct your own due diligence and consult your financial advisor before making any investment decisions. I am not a financial advisor, and this content is only meant for entertainment purposes. Please consult your tax profession on any gains or losses as a result of investing into crypto or any assets invested in. This is not financial advice, but it is for entertainment and social education purposes. That's it in a nutshell, guys. So I hope everybody's doing well. Um, What's up? How you doing? 360p. We definitely seen some stuff that's moving. Well, I mean, right now in the markets, 360, just everything just went crazy, right? The market, like I was talking back in um, February, February and March that we were in a crypto winter. We were moving down, and that I had seen a bunch of stuff, and I can actually even go back and you can sit here and see it. Some of the stuff I'm going to talk about today, it's going to seem quite outlandish. Just like when I was talking about like Bitcoin, when Bitcoin was at, I think it was 50,000, I think, or 45,000. We had dropped down and then we came back up, and people were like, oh, and I was like, no, guys, we put in lower highs and lower lows, and it was definitely showing weakness. Something that for me, I sit there and I'm looking at this going, um, just and there's nothing wrong with it, but it's just to me we were showing weakness in the market, and we had put two consecutive lower highs and lower lows in, and so that basically showed weakness to me within Bitcoin. We were not putting in major buyer wicks, and we were putting more seller wicks in on the weekly charts. So to me, we were definitely showing weakness. So no matter where you went, the market was going to turn down. Now, I was fairly new to crypto, so I didn't know how to really voice my opinion because I wanted to believe other people. But listen, I believe the charts are always telling us what's going on, and um, and so I'm basically going to kind of point out some things. I want to real quick talk about the S&P 500 first. Now, S&P 500 is about 23%, 23 to 25% down right now from its all-time high. We've seen some pretty big push-ups and then some pretty push-downs. Um, Based off of some of the market analysis that I've done on this, and this is nothing bad. It's just part of what I'm looking at. And especially for our generation, people are like 40, um, 50, 40, 30, people who are just going right, who are still in the market. We've been a part of this big run, right? If you're my age, you were part of 2002 or 2002 drop, also 2008 drop. You were just really getting into the workforce, graduating college, and making things happen. By the way, forgive me, I am sipping some tea, so if you hear me sipping tea, I apologize. I make my own tea. It's good, puts hair on my chest. It has clove, it has allspice. I throw some thyme in it, some turmeric, fresh ground pepper, and then also just to help my brain and everything that I'm doing. I use this in conjunction with my intermittent fasting, and I throw in nutmeg. So it kind of keeps the brain juices flowing. It helps me out quite a bit to be able to communicate in an efficient manner. I wouldn't call myself an orator or a great speaker. It's one of the primary reasons why I haven't really been doing this, and I apologize simply because I feel like I sound not as polished as I hear a lot of the other YouTuber guys out there doing stuff. So I'm just going to show you a little bit what I'm doing. So if we see here, um, S&P 500 hits S&P 500, as you see, guys, we've been putting in lower highs and lower lows since about the early 2000 or December 2. We started where we did the peak 4,800, and then we came down, put in lower high, we came back down, put in a lower low. We had a sort of rally off the 400 period moving average right here. Then we saw another rally back up, which this was I thought this might have been a bullish symbol, but once we put in this little junction point right here, it doesn't seem like much, but we couldn't sustain above just the simple moving average once it cleared. A lot of the major moving averages, like the 200 and 100, it was, and we put this in, and we came back up and bounced off of this. I realized back in April, right here, this was like, oh man, this is not good, not good, no bueno, no bueno. So when I saw that, I basically said to myself, I became more bearish than bullish, and like the market can always put you in check. Like no matter what, nobody ever has the crystal ball. But I use technicals and I use moving averages and use some other indicators to kind of help me gauge. But my primary thing is what I'm looking for is wicks. The wicks tell me which way the markets are going to move. So when you look at the weekly, you can actually see that we're definitely putting in more wicks, seller wicks than buyer wicks. So as I'm looking at this is what was communicating to me that we're going to be moving down here. Now, if we see right here, let me go back to the daily. I want to point this out. As I'm looking at this, at the market, we're seeing we had another leg down the last few weeks. Now we're moving back up. Now I can truly see, if things kind of do go well, I can see it's coming back up into the area of the 4,100 within the market. And then seeing us sell off and put in another leg down, just primarily because of I don't really see any seller wicks, any supply zones in this area until we get about right up into here. But for me, when I'm looking at the market, what I'm really looking for is moving average in conjunction with supply and demand zones. I like to really use those together to really kind of give me a good analysis of it. I like to look at the daily charts, just primarily when I'm looking as a gauge of running. The reason why I do that is because a lot of the big institutions use the daily charts. They use the daily, weekly, monthly charts. So if anybody's been into trading much, you'll know whether you learned through, and I'm an old timer, I learned trading through Invest Tools. They no longer exist, but then I started messing with Online Trading Academy and a few other, and then my primary coach was actually through Chris Koopman with what was his? Chris Koopman as Easy Money Day Trading. Find him on Twitter. But anyways, I say that because we're at a certain junction point right now where we're at the 25% retracement. Okay, right? We're coming up in a few weeks where we're going to be coming out with the numbers for the economy. And if we have 2 quarters straight in a row that gets put into the market with numbers that are down, that's basically a recession that we go into. That's basically the textbook term for a recession, which we then could see another major sell-off, another leg down. So I want to point out certain things that we could see the market go to. Now, again, this isn't anything bad. If you guys have money, even just a little bit of money, I suggest always dollar cost averaging into major indexes. Putting money in with your financial advisor if you have financial advisors. You know what I'm saying? As the market is selling off, the best way, because majority of you guys don't have 20 years of trading the market like I do, or 16 or 17 years, right? Most people basically look at and listen to financial advisors. And one thing I love about financial advisors, a lot of them know some stuff about the market, but what they really do help you with is they help you with honestly analyzing and staying in the market. So it really helps. Oh, Ralphie, I'm about to bring you on. And I love Ralph. Ralphie is here. What's up, brother?
What's going on, man? How are you?
Can you hear me?
Yeah, can you hear me?
Oh, I cannot hear you.
You can't hear me?
Is it me?
No, me.
I hope y'all can hear me.
Testing, testing. 1, 2,
I
1.
can't hear you, but give me 1 second. Let me see what's going on. Hopefully you guys have the ability to hear me.
Oh, maybe it's your.
Give me 1 sec. I'm gonna call Ralphie here real quick just to see what's going on. Hopefully you guys can hear me.
I think people can hear me.
Come on. There we go. Sorry, guys. Hey, brother, how you doing?
What's up, man? Hey, I can hear you.
Okay.
But I don't think you can hear me.
I cannot. Yeah.
Because I tested the thing, and it showed that the system can hear me. So maybe your headphones or something's not working.
Let me see. It shows here that says I'm trying to unmute you, and it show me can't unmute your guest because they chose to mute themselves. That's what.
Yeah,
Okay. Well, come in. Actually, go in or leave and come back in. Sometimes that works. Hey, how you doing, Wincho? I see you out there, brother. How you doing?
Can you hear me now?
So let's go ahead. I'm gonna show here real quick where we're at. So now within the market again, like I want to point this out, I am not a financial advisor, but I've done this enough. I've been a part of the markets, and for a number of years now, I've been paying attention to them. So just simply, and every day I do trade. I trade the markets. You can find me on Twitter. I think it's Pedro Garcia. I post my trades. I take 2 to 3 trades a day. I'm not a huge trader. I go in and I just simply make my money for the day and I get out. You know what I'm saying? And that's it. There's nothing special about it. It's real simple and easy. Well, not simple and easy. I've spent many years and a lot of money that I given back to the market to get where I'm at. There's nothing in life that's easy. My foster father once told me that anything in life that is worth doing will never be easy. And so he was very right. Very, very right. So what I'm going to point out certain junctional points in the market that I am looking at. The reason why these areas for me are strong areas is simply because it's just I'm looking at them from a technical standpoint that I have my own parameters that I look at. And if ever you want to learn how I do that, go check out Chris Koopman. He'll teach you. But I do not teach people unless you're going to become a part of Moon Rock and some of the stuff that we have going on with that. But as you can see right here, that this area right here is my strong area. Primarily simply because it was a previous high. As we see here, this was the previous high right here where the market came up, pushed up, came back down. And then we saw it really push up. And from here, it was sayonara. All the way up, I think, to 4,800 is where we hit. So this area right here is kind of a little kind of line in the sand for myself, primarily because also on a weekly chart, we have the 200 period moving average sitting right here. And so for me, I'm saying that's an indication for me to, it's a strong indicator of a demand zone with an SMA, strong SMA on a weekly chart. I can see us maybe hitting this and then pushing up. Again, this is not financial advice. All right, Rafi, I'll bring you in. I see you there. Go ahead and come. You should be able to speak, my friend.
You can see me? You can hear me?
Ah,
Oh, you don't hear
maybe
me.
try your system.
I think
And
everyone else hears me.
let me see here. Because it shows that you can speak
Yep,
and you're not muted.
I'm not.
You know what? Let's try this. It might be easier to do this as well.
Hey, bro, I think it's your speakers, man.
The speakers.
Your speakers, yeah.
Well, this we're actually live streaming through.
Is your volume up?
Yeah, yep. My volume is up. Yes, sir. Let me see here real quick. Yep. My volume is up on everything.
You can hear me or no?
You should be able to. Yep.
No.
It's so funny. Yeah, it is. It is. I apologize. Yeah, you should be able to. You should be able to speak. I don't understand what is
No,
going on.
you can't hear me, huh? Okay, no worries, man. Keep doing your thing.
Okay, well, so the best thing is let's try then. I'm gonna have you. I'm gonna call into Ralphie, and we'll just do it over the phone.
No,
system,
don't worry
right?
about
That's
it. Don't worry
actually
about
one
it.
of the ways that we could actually do it. So it's actually pretty cool. And we'll keep it that way. That makes things a little simpler. And now my phone doesn't want to work. Come on. There we are. Real quick, I'm gonna bring Ralphie on here in a few minutes. Real quick, if you want to, Ralphie, you can actually communicate through the communication. If you click on the chat or comments, you can also communicate as well through that. So if we want to say something, I cannot. Oh, here we go. And just a shout out, we do use StreamYard. They're a great company. Sometimes we have little glitches that we have to figure out what we need to do, but it's just one of those things that what are you gonna do right now? You are unmuted, my friend. You are good. Everything should be good. I'm waiting for my phone. So real quick, as my phone is deciding to recharge itself, for whatever reason, I don't know why that's happening. Let me go ahead and go over this here real quick, and then I want to hear Ralphie's thought process through this.
You can't hear now.
So from a technical standpoint, I'm looking at the markets from a daily chart. I see we kind of have a line in the sand right in this area on the 3,500 mark. We do have a deep retracement of 25%, 23 to 25% within the S&P 500, which is kind of a good thing. Now, many of you guys know who've been within Moonrock that I've been talking about the 30,000 mark, and then in addition to that, I've talked about the 20 and then the 17,000 mark. These all marks that I've kind of called, that I've talked to you guys about, just primarily because it's really helped with a lot of stuff that just they're the little points in the market that I see where we have buyers and sellers. These areas are where buyers are sitting or sellers are sitting, and they basically kind of institutions kind of play off of that. Now, for me, when I'm looking at the markets, I'm really seeing that I think we can go much lower. And this isn't, like, again, I want to put out not a negative thing. Simply because people, this is a good, if you are in retirement stage, right, you should be in bonds, right? You should be where as interest rates keep moving up, you can be buying bonds where you can get higher yields on your bonds if you're older, right? Or maybe even sitting more in cash, right? But in the backside of things, I can sit there and see. Let me bring you in again, add you to stream. Ralphie, are you there, bud?
Yeah, can you hear me now?
Cannot hear. Why is that not happening? We have to figure that out. I'm gonna call you up on the phone here, my friend, and we can hear you.
I got a better one. I'm gonna try something else out.
Excellent. Can you hear me? Here we are. Let's just call him up the old-fashioned way.
Hey, what's up?
Hey, so you are on live with us. This is funny, but it's all good.
Trying to just, I'm going to get on another device. So.
Okay.
Let's see if this works this time.
Awesome. Awesome.
All right, so I'm connecting with you through this one
And guys, we're gonna be able. We'll take care of this. The next, from now on, we'll make sure that the technical side of this will be taken
here.
care
It's
of.
not our fault. I mean, on my end it works.
Yeah.
Right? Maybe they're hearing me. Maybe they hear me. Maybe they don't. I don't know.
Maybe let's ask. Can you guys hear him? Can you guys hear him? Oh. Let's try that stream.
What about now?
And that's a negative. Okay.
What
This
about
is
now?
this should work. Audio.
Can you hear me now?
Default microphone. Yeah, you should. Yeah, for whatever reason, we are having some major issues for this.
Can you hear me now?
And it is not sitting well. Let me go ahead and we can hear you both. Oh, so Ralph, they can hear you both. So they can hear you and they can hear me.
Like I said, man,
So
I think it's your audio. I think it's your speakers.
But I can't hear you. Okay, so it definitely is my mic then. Give me 1 second. Ralphie, if you want to go ahead and take over the sharing of the screen, you can. Kind of if you want to kind of show some stuff. I'm going to see what's going on with
No.
my
I
system.
mean, I'm not going to
Yes.
share I can't share the screen right now. But what I can say is that
So let me see what's going on.
we were doing a late night market analysis with the team.
Now, and I'm gonna
and Pedro pointed out.
Have you talked about the current situation?
Yeah,
kind of the fundamental side, but
I am talking about it. So, Pedro pointed out a few things on the technical side, right, where the chart can go, and it didn't let me go to sleep till like 3 o'clock in the morning because I had to keep diving into the fundamentals to see if the fundamentals support the estimate of where the chart can go on the S&P 500, in the near future. And it's actually, Pedro was mentioning earlier, he doesn't want to sound pessimistic or, sound like, the sky's falling, but yeah, there are some pretty alarming issues right now, such as like the current debt cycle for consumers. With rising interest rates, the other thing that's rising are credit card interest rates. And more people are using credit card debt now because of the increase of costs associated to gas, food, everything, rent. And so the overall consumers, price index is outpricing what consumers can actually spend. Maybe not everyone, but the masses. And so we're looking at this, and the thing is, what happens when people are not able to keep up with their credit card bills? They start defaulting. It'll take about 180 days from default for people to start going through charge-offs, bankruptcies, things like that. So, and this could occur rather quickly the more expensive things get. So inflation is definitely an issue. Pedro, can you hear me now? No. Okay. So, things can get pretty expensive rather quickly. And a lot of families, unfortunately, were already at the edge of what they can afford. And now they're finding themselves cutting costs. So what does that mean? That means less money spent on some other leisure activities, meaning that you'll see less airline usage, less hotel usage, less restaurant usage, less, massages, all that, which hurts the economy overall, because now those people, the owners of those companies and the employees that work in those places, are now at risk and perhaps have to cut costs themselves. And so this is just a ripple effect, right? And so unfortunately, that is, on the fundamental side, is not looking too good. And then I started looking into Michael Burry and what he's been saying, at least lately, last couple of years. Michael Burry is the guy that, he caught what was going to happen in 2008, the big major recession that happened in 2008. He caught it in 2005. He actually created the credit default swap, the first credit default swap back, basically the tool that bet against the real estate market. And he created that in 2005 because he saw what was going to happen. He just didn't think it was going to take that long to occur. But now that, everything is happening, like the markets, the S&P 500 is starting to come down. Yeah, I can hear you, Pedro.
Hello.
Pedro. So now that the markets are starting to come down, yeah, Pedro. So he actually made a prediction of where the S&P 500 could fall to, and it actually aligns very close to what Pedro's technical analysis was, and his reasonings as to why and where it would fall to those levels are similar to the reasoning that I'm giving you. Is a lot of the debt that's mounting up right now, higher costs associated to everything, just people unable to afford a lot of goods. And so that number, I guess Pedro will tell. I'll let Pedro tell you what that number could be. It's a very scary number, not zero, but still very scary for the S&P 500.
How you doing, brother? So I figured it out. Can you hear me now?
What was it, Pedro?
Somehow my speakers got switched. I don't even understand how that happened because I don't touch any of that. And somehow my speakers switched within the system, and yeah, whatever. But now it's fixed. Thank you, tech team at StreamYard. You guys are quick and fast. So thank you for your quick help. That makes things a lot easier. Okay. So what have you gone over, my friend?
So basically, I went over some of the fundamentals of like some of the things that I was looking at last night after our meeting, our market analysis meeting, which we had at 8 p.m. I didn't go to sleep till 3 a.m. doing research on the fundamentals, because like hearing what you had to say kind of like gave me insomnia.
I'm sorry.
No, man, because I mean, like if that happens, man, that could be catastrophic for the markets in the U.S. in regards to stocks. Yeah. I don't know how crypto will react to it. It's going to be very interesting. Mm-hmm. Would people start adopting crypto because the markets would fall so hard? Now, I gave my explanation, but I didn't say where the markets would fall to because I want to let you talk about that. But hey, did
you talk about some? So you have you go to, like, I just stick to the charts. I don't look at anything else because I don't want anything changing my mindset on what I'm looking at on the charts. Mm-hmm. So I try not to go to talking heads where market analysis. What are some of the names that you went and looked? And just even putting out the names there, some of your market analysis that you went to, if you don't mind going, just saying the names and saying where you got it from as well.
I mean, I was looking at short-term credit. I was looking at basically, I was doing analysis on credit card debt in the U.S., the amount of defaults occurring in Q1 with credit cards, real estate, farmland. It was big list. And then we're looking at, Q2, how things are getting more difficult. And this, by the way, the defaults have only been increasing for the last 3 consecutive quarters. That's not good, right? And now you have a scenario where costs of goods are doubling, right?
Yes.
And I don't see that improving. I don't see the defaults improving. I see it getting worse. And if defaults were already growing for the last 3 quarters, then that means, pretty soon, if things get more and more expensive, I mean, people could start losing their homes, potentially trying to put their homes on the market to save themselves first. I don't think it's going to be that bad like 2008 on the real estate side. I just think on the consumer side, it is going to get pretty bad. But remember Michael Burry?
Bitcoin guy?
Michael Burry, the guy that created credit default swaps back in 2005.
Okay. Yes.
And bet against the real estate market. They made a movie about him.
Oh yeah, the great. What is it? Not the Great Short. The Big Short.
I think it was The Big Short. Yeah.
Yeah. Yes.
So he came out saying, actually, just recently, I think last week, his prediction of where the S&P is going to go, and it's actually very close to what you were saying.
Really?
You want to hear it?
Yeah. What is? Yeah. Say. I would love for you to. So
he said 1800. He said 1800.
1800. Yeah.
And I saw that, I found that one at 2:30 in the morning. That tweet from him, and I was like, oh wow, because you were saying 1500. He's saying 8. You're not too far off. 1800. That's what he's saying. I mean, the fact, if it goes even to the 1000s, that's bad news, man.
Yeah.
But the fact is that you're talking from a technical perspective, that it could come down to 1500. He's talking from a fundamental perspective that it'll come down to 1800.
That's interesting. That's very interesting.
And just to give everyone some perspective, that's a 50% loss in the S&P.
Yeah.
That means we got ways to go if this continues to happen, which seemingly it will, because our current leadership doesn't even understand what's happening. They think that there's nothing wrong. Did you see that quick little interview with, not even an interview, it was like a quick clip with Biden? I think it was over the weekend. I think he was he was outside and a reporter was like, hey, what do you think about this whole recession that people are talking about? He's like, nobody thinks that, not the masses, nobody thinks we're going into a recession. I was talking to our ex-treasury, blah, 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 and they don't think that, a recession is inevitable. So basically he doesn't understand. Here's the thing, man, anyone in that position that was up there, sitting in the ivory towers, they don't really know what's happening down in the streets.
Yeah. Until
does he even fill up a gas tank?
No, I don't think they do. I mean,
right? Does he even go shopping? Does he go buy his own groceries? No, he doesn't know. So I don't blame him too much on that, right? Because he relies on information that comes from analysts. But by the time they get the information, it's already too late, man.
Yep.
You're already 1 or 2 quarters late.
Yeah. I mean, they said transitory. Thank you. Transitorial inflation. When I heard that, I literally just thought to myself, wow, what a word.
Yeah.
What a word.
That was PR, trying to do their best there, right?
Yeah.
Guys, let's call it transitory. It's just gonna come through real quick like a train and then just go away.
Well, when you when you funnel a ton of money not only into the bankers' hands to put into artificial push the market up, stock market and things by buying T-bonds and that whole entire transaction, but then you actually gave the people money. You told them to sit at home and do nothing, and we're going to give you money, and there was no production out of that.
I mean, it wasn't just that. It's a combination of things too.
Yeah.
It's also, you know,
Yeah.
the imports were not
Yes.
properly brought in. I mean, there are so many
Managed well.
boats sitting out there. So supply chain, you know, there's a huge bottleneck there. Then, I mean, here's another reality that like we didn't have enough immigrants come into this country. I know, I get it. Like, you know, the U.S. doesn't want to bring in, you know, the wrong people and all that. But the fact is, we do rely on immigrants in this country.
Why do we rely on immigrants?
It's cheap labor, man. It's cheap labor, and like not everybody wants to work at McDonald's, right? It's a fact. Not everybody wants to work at McDonald's. Not even the guys in crypto that make jokes about it and, you know, they're losing all their money right now. Do they want to work at McDonald's? They probably won't apply at McDonald's. But the fact is that, you know, immigrants are willing to do it, right? Immigrants are willing to clean houses, work at McDonald's, do all those jobs that we don't want to do. Right. And the fact that we can't find people to do that means that they have to raise wages for those jobs, and yet still not find the talent, you know, and yeah, a lot of people might look at that and think to themselves, well, it's about time they raise the wages. Well, what if that business can't support itself with the wage increases the way they've been going? Yeah, I agree. Wages should increase. But if wages increase by 100% over 1 year, that's a shock to the business, and that business might be in loss. So even though you might see that wage increase in that business might not even be around to pay those wages the next year. People don't think, you know, ahead. They think only now, unfortunately. Not everyone, but most people, they only think today, right? And they don't have that long-term mindset of like how things can get affected, unfortunately. And this is where we're going because of it, right? Like, for example, the reduction of subsidies for fuel companies, right? Like the oil companies, like that just reduces the amount of oil that is going to be produced in the United States. It reduces it reduces overall the incentive. That's the word, the incentive. If I'm not being incentivized to do something properly, then I'm not going to do it, right? And you're not going to force me to do it, especially when people don't know that you can't just restart an oil rig. A bunch of oil rigs had to get stopped because, you know, the oil markets were going to the negatives back when COVID started. So they stopped the oil rigs. But to restart an oil rig, it's not that simple. It costs millions of dollars. You need engineers. You need people that are gonna, like, you need to set up a whole team. It takes time. It's not like you just flip a switch and you start pumping oil again. And so, like, how are you going to incentivize those people? What talks is Biden having to incentivize them to do that? So he brought up this new federal tax holiday for oil.
Yeah, but it's just for the 4th of July.
You know what that's
right?
like? You know what that's like?
Putting a Band-Aid on a...
Not even, bro. Not even. That's like putting Neosporin. Not even the freaking Band-Aid. That's like putting a little drop of Neosporin on a huge gash. It's not going to do anything.
Yeah.
So it's like, I feel like, okay, so that's where my concern is. If the leadership doesn't see the reality and they're not even taking it serious enough to like make real big decisions that can help everyone, then we're going to end up going down to the areas that you're talking about. And that's why I couldn't sleep last night, because I kept doing the research on this and I'm looking at like the current state of short-term debts and long-term debts and defaults and, you know, the increase in interest rates for credit cards, they're increasing, guys. You can go and talk to your credit card provider and find out, hey, what's my current interest rate? How much has it gone up in the last year? It's going up every time that they raise rates at the Federal Reserve level. They're raising your credit cards and everything. So now you got to look at that. And if you have any debt sitting on your credit card, just know it's compounding even faster now. And you might think, oh, but it's only 1% more. 1% is a big deal. And just to give you guys a perspective, okay? You guys know that, I've been in lending for a few years. Back, if you had this salary to be able to support a $550,000 purchase of a home, last year you would have been able to purchase a home of $550,000 with a 3% interest rate. Today, with the current rates above 6.5%, you'd only qualify for about a $350,000 home. That's a $200,000 increase. That means your purchasing power has dropped, and that's happening to a lot of people.
Why is that important? Why is it in the micro sense of the economy? A bigger house means what versus a smaller house means?
These are transactions, right? There are businesses that rely on these larger transactions. GDP relies on it. I mean, there's not enough. If there's not enough movement in, or if the amount of volume being transacted drops significantly, then that means GDP is going backwards, gross domestic product. If GDP goes backwards, then that is an indication of recession. In fact, the actual definition of recession is that 2 consecutive quarters of declining GDP is a recession.
Yes. Yeah.
And the thing is, because the government is barely doing anything about it right now, as you're hearing, we're probably already in a recession, just so everybody understands. We're like in the start of one. Because they're not doing anything right now, that means that, again, as I mentioned earlier, when they announce that we are in a recession, it's already been 1 or 2 quarters of being in a recession, which means that we're likely, and this is going to sound like, crazy, but we'd be probably hitting depression levels. Yeah, people don't want to hear that.
Yeah, well, but here's I think the plus side to this, right? And I'm gonna real quick go over just analysis of where I feel like the market is going to be headed, and what would be good times. I'm not to dollar cost average into the markets and what's actually going on within it. If I'm wrong, I hope I'm wrong. And there have been times where I've been wrong, but I've been more right than wrong over my lifetime now within the markets. So I pray that I'm wrong. It's going to be a hard time for everybody. But if we save money, and when I say save money, I mean we dollar cost average into the market, DCA, and we allow ourselves to be diversified in crypto, stock market, also ETFs around the world. I'm going to bring up certain things for us to look at, strong economies that might be good for us to DCA into. One being the PGJ, which is actually China's ETF. The other one being Germany. And then there are a few other ETFs that are emerging markets that you can look into where you can just dollar cost average into these things.
I mean, but you know what, Pedro? I think that now more than ever, we actually have to go more basic than that. I think that we need to start talking about budgeting and emergency funds and things as simple as that. Because how can you dollar cost average if you're really not in a position, for a lot of people, this is the case. You're not in a position probably to invest. Okay. And that's not everyone. Maybe you listening right now, maybe you are in a position to invest because you already have an emergency fund. You already have a good budget, a job, sufficient income. You've already set yourself up, right? But for those that haven't, right, if they hear dollar cost average, okay, let me put my emergency funds into an investment portfolio. No, your emergency fund should not go into investment. Your emergency fund should be in a savings account, even if it's not making anything. It's a rainy day fund. Maybe even want to put it in cash, just in case something happens to some of these banks. But I mean, I'm just keeping it real, right? Like, people need to take this stuff into consideration, because, like, if you don't have those set up, if you don't have that emergency fund, if you don't have your budget and everything set up, then you should not be investing. You are going to go through pain, because if your investments don't go the way that you want them to go, which for a lot of people that's already happening, then you're going to start panicking. You're going to sell them at the wrong time. You're going to actually lose money, and it's just not going to be a very pleasant experience. So it's better to do these things wisely, not gambling.
Good point. You know what? That is a great point. All right. So one of the things that I've done, right, is you don't necessarily, when you're talking about rainy day funds, I always think to myself, if money is sitting, right, and especially with inflation, you're losing money. Right. So is it best to
it's true. Yeah, you are losing money if there's very strong inflation, but here's the thing.
Well, what about money market accounts? The reason why I'm bringing that up is as we see interest rates.
Money markets, what are they paying though?
Well, as we start to see the increase in the
1 or 2%
interest rates, is it 1 or 2%
for
now? But
hopefully, but that's why. Yeah. So what do you do? You can put your money into money markets, but then let's look at what happened in 2008, right? Some money markets went down 30%.
Yes, I remember. Yep.
You can see this in crypto. I mean, I considered, for example, UST to be a similar type of money market. Some of these stable coins, I consider them to be money markets, because what's backing them up, apart from these algo like UST, algo stable coins, in crypto, what's backing up a lot of these stable coins are US dollar equivalents. So they could be bonds, they could be short-term bonds, they could be treasuries, they can be cash, right? But for the most part, it's not cash. And if those assets deplete in value, then what's backing up that stable coin is coming down, which means it could lose its peg.
Got it.
So hypothetically, USDT and USDC could lose its peg if they're too exposed to US dollar equivalents, such as money markets and the US Treasury notes and bonds.
So if we see if we see interest rates start to move even higher, let's say we start to see now, I mean, potentially the way it's set up, we could see another 70s or back in the 70s when you had 10, 12, 15% interest rates. I mean, it was nuts, right? And so,
I mean, we actually still had, I mean, are you talking about loans, or are you talking about CDs and
CDs and loans?
CDs, we actually had those rates back in the early 2000s. We had those where banks were giving out. I remember seeing a CD when I was at Merrill of like 18% or something crazy like that. I'm like, when did you get this? And it was a CD that was acquired like in the early 2000s, and the bank was trying to convince that person to cash it out, to not leave it there. And I was like, no, you better leave that there. Like, I wouldn't be able to do what that CD is doing for you. You know, I can't guarantee you 18%. The markets go up and down the valley. I mean, leave it there. That's fine. I wish I could put my own money in there.
I'm jealous. And they got it back in 2000?
It was the early 2000s. I'm not sure exactly. I'm not sure if it was like 2007, 2008. I'd have to look into when the CDs were at online, but I remember seeing like when it started. It was around that time frame. But yeah, in the 80s, in the early 90s, loans were in that level, right? So most people were getting loans in the teens. and then started refinancing after that. But then, home prices weren't so high either, right?
Yeah, it was a
I mean, people were buying homes at $100,000,
I remember.
right? Homes that now cost probably close to $1,700,000, $1 million.
Yeah, it's been.
So, there's a difference there.
Yes. There's that backside when we look at the markets and you're able to sit there and see hindsight, right? You saw the defaults kicking in early, 2000 or late 2006, early 2007. You started seeing people defaulting on many of these loans, but people weren't catching it by then, right? People weren't looking at it because we were in the great housing bubble. And so the idea behind is where we're sitting now. I don't want to jump back to what you were talking about with defaults going on with credit cards. What's going on with educational loans? Because part of this huge growth is from educational loans, right? Going into the banks, and the government's a part of it now. What is that looking? Are students going? You think students are going to walk away from their government loans that they're done and just say, you know what, I can't even get a job?
I think the government is going to end up trying to forgive a lot of these loans in order to win votes. That's my opinion, because they have control over it. They have control over these loans. But the fact is, if we continue going down this route where debt spirals out of control, people can't pay for their credit cards, and then 1 out of every 2 people are filing for bankruptcy, meaning basically everyone middle class and below, or less than middle class, lower middle class and below, starts filing for bankruptcy, then you might see a situation where, and this might be crazy, but I hope this is recorded because I'm going to, put something out there. You might see a situation where the government is going to try to forgive debt overall for certain people, like credit card debt, everything, because they might get to a point where they may have to put a blanket, erasing debt for people, which the way they would structure it is probably providing some sort of benefit to the credit card companies, to the banks, etc. Hold on, give me one moment.
No, and while he's taking care of that, I'm going to go quickly over where I feel the market from a technical standpoint, where it's going to be at. It's definitely one of those things that we're definitely heading towards. So my line in the sand right now, looking at the markets, is really, it's a range. So for me, it's this 3,500, 3,400 mark area. Just because we have a lot of buyers sitting here, and it's the previous high of COVID. So when COVID dropped and we saw that
V-shaped recovery.
V-shaped recovery. This is where this is the previous high. So to me, I like this area of, and by this time, this would be about a 30% retracement within the market. And I believe, wasn't the 2008 40%? As well as the Great Depression. Wasn't the Great Depression, wasn't it 50%? What was the Great Depression retracement? Do you remember?
No, I don't know it off the top of my head. But yeah, I mean, it could definitely hit those levels, man. Like, I have no doubt in my mind that the markets can go back down to the lows of, you're saying that one of your next levels is the top of right before COVID.
Yeah,
but I mean, there's so many things going on right now that it could go very low.
Yeah, we're gonna go into that here in a second.
Yeah.
But here we go. 2000.
But then the next, because we are related to crypto, right?
Yes,
it's like, will crypto be the savior of all this? Will Bitcoin, starting with Bitcoin, will Bitcoin be something that, talking about what you were just mentioning in regards to assets that you might want to sit on while inflation goes rampant, and while there's a recession and other assets are going down? If for some reason, someone comes in with like the most money ever to bring up the price of Bitcoin, and people start, stimulating Bitcoin, and Bitcoin starts to become the new gold where people go to when a recession is occurring, then I mean that could be the thing that turns around the whole entire crypto market.
Yeah, and that's where I look at certain things because people are in cryptocurrency. We know, like a lot of us have bought high right now, right? But we're at that point where we're seeing the markets the way they're sitting, and it's one of those things that if the market does drop, right, even more, we're like, okay, where can we save? Where can we pull money out so that we can, how can we save enough to where we can put money into the markets, right? That's really what we're trying to look at and what we're trying to see. And this is what I'm trying to encourage everybody with is, especially those who are in their, 50s, 40s, and 30s who are in the market, who are paying attention to crypto. Everything's on discount. Things are at a 70 to 90% discounted rate. So this is a good price to be. And again, this is not financial advice, but I know that I'm definitely purchasing certain products, certain protocols that I feel have a strong backing. They've got a good business behind it, and in that same sense, it allows us to be able to purchase more. The short of it is I think it's better to throw a little bit of money, right? Like where you would normally spend money on a hot dog or you would buy a Gatorade, right? You'd go into a convenience store. Put that money, where you would normally buy, you would go and get a pizza pie. I'm on the East Coast here, so we call it the pizza pie. You spend $20, $30 on that. Keep that money in your pocket and start looking to, because since everything is so discounted rate, you can buy some nice protocols, like Matic, like a few of these other babies that are still at a low rate, and you can get a good chunk with not a lot of money because they are 60, 80, 90% discount. I mean, what are your thoughts on that?
My thoughts is that cash is king right now. It hurts to say because we're in crypto, but cash is king right now. And I personally would rather do that strategy where I'm not buying that extra pizza or which I'm not, by the way. Like my family, we're not going out to eat. We're not like, we're eating at the house. Like we're trying to cut as much as we can on expenses and put away that cash in order to take advantage of these market opportunities as they arise, right? And I mean, there's right now, like again, I would put away cash and then wait for the market to signal an actual turnaround, and then probably go into it at that. Not saying that I would buy Bitcoin at 60, wait for Bitcoin to hit 60,000. I'm just saying like there needs to be something that shows us that Bitcoin is finally going against the market movement. The day that we see, the markets continue, S&P 500 continuing to drop, and then Bitcoin rising against that, that'll be the sign.
I am putting a article about the Great Depression, economics from Forbes 101. And I'm putting that in the comments if you guys want to go read through that. I think that would be a good read for a lot of people to kind of understand what's going on percentage-wise in the market. Here we go. There you guys go. Check that out. I think it'd be an interesting read for many people who are in the markets.
I gotta head out actually, man. I got a meeting I'm going to right now.
It's all good. So let me finish this up here so we can kind of go over, because I know we've been kind of talking up the pricing here. So these certain areas that I picked out are certain junctional points that might be turning around. I want to say turn around, but just stopping points. If we do see major sell-offs. And the biggest point is this, is when we're looking for these junctional points, if you start to see a lot of red coming into it, kind of looking like this, and then you see sell-off, or you see green coming in, but we don't see higher lows and higher highs, that's going to be the indication saying we're not finished yet. That leg is still not finished. So I'll real quick show you when we go into the 2,900 mark right here, this 3,000 mark. Again, this is a little junctional point, but these areas here, they have all been tested. There's no, after this point right here that I pointed out, the 34 to 3,500 mark, there are no other points in the market that has not been tested. They're all old zones that have been eaten up where buyers were sitting. And so there's somewhat of a strong one sitting here within this market, but it's still not as strong areas. I feel like it has been tested. The zone has been tested. So for me, when I look at the only zone that has not been really tested and is still a fairly strong area is at the market value of about right here. Pardon me. This is at the 40, the 50 or 5, the 50, 1584 area to 1552. This right area is the previous high of a 2008 market. And so this is 2008 when it dropped off here. And the way markets cycle is they go from previous highs, right? Things that were previous highs, that then becomes the previous low once the market pushes through. So a lot of times, if you go and look at a lot of the charts, it'll look like something like this. If you just go back and look at mini charts, whether it's a 5-minute, 10-minute, 30-minute, hour, 2-hour, a lot of times it'll look like this. Is it show? Nope, it doesn't show here. But you can sit here and see that the market, this is the previous high. So we're going to be able to sit there and see this market turn around. And if this market does come down to this area, it's going to be one of those things that it's going to be, we still got a bit of a drop left from here. But don't worry, sit there, look at the markets. Cash is king, as Ralphie said. Put your money aside and be ready to go ahead and look at the markets as they move. But these areas right here, for me, I'm looking at these as junctional points to maybe kind of be purchasing as we keep moving down. But as the guy on The Big Short, he basically said, Michael, I forget his last name, Ralphie knew his name. He's predicting 1800, which is this area right here. I don't see any real strong technicals here when it comes to, I see a lot of buyer wicks, but I don't see a lot of wicks where it could probably hold. My real indicator is really primarily right here. It could be kind of two places. It could be the 1600 mark here. Apologize here. The 1600 mark here. Or also the 1500, 1584 to 1552 mark. I think these areas are nice little areas that we can sit there and gauge which way the market's going. So thanks for coming in, listening, guys. I'm going to start doing these 3 times a week, just kind of going over the markets, seeing what's going on. I'll probably be doing around 11 o'clock Eastern Standard Time. Kind of wait because I trade in the morning. And for me, it's kind of hard. I'll probably bring on other guests. So the reason why, and just bring this up here, when we look at Bitcoin, okay, and I want to bring this up for Bitcoin, we'll jump on because that's one of the primary reasons. But just to give you guys heads up that I am definitely looking to start doing this more often than not, just to show you guys what could be coming, what is in the market, and just see what might happen, what might not happen. But it's still one of those things that it is a it's potential. I'd rather at least have you guys understand what's going on than what might not go on. Give me 1 second here. And I know I sound like an idiot. I wish I was a better speaker. BTC. Dollar. That's when I had it. My foster father used to tell me, "You're a lot smarter than you sound." Give me 1 second. Here we go. BTC. Tether. All right. BTC Tether. These are the shorts. Here we are. Okay, guys, so this is some of the areas that I'm looking at right here. So many of you who were in Moonrock knew that I was calling the markets and how they were moving. This area here, many of you saw me call this area the 17 on our AMAs when we go over certain things. So you guys know, you guys have been prepared and ready for this, of the market turning around here. And so the 1700 mark area, at the time back here when the market was sitting at about 40,000, I had said that this area sitting was the 17,000, 16 or the 16,000 mark here. Now I like this area because this is the previous highs that we were sitting at when Bitcoin was at the 20,000 minutes sold off. Now again, I don't know, but if it breaks through this area, the next junctional point that we're going to probably be headed to is the 10,000 mark area. Okay. And then for Bitcoin, if we do push through that, then I don't know if I see this 8. I think we honestly, like for Bitcoin, I can see Bitcoin coming down to about the 3,000, 6,000 area. It's really right here is what I'm looking at. Let me pull this up real quick. This area right here I was looking at last night. Most people don't want to hear this. I'm just saying, like, this is, you know, if the market does sell off, these are these junctional points that I'm looking at for myself, right? To purchase and get in at a discount, and then really just kind of gauging what's up with it. So this area, these areas here, have already been chewed up and spit out. There's really nothing else in this area. We basically have a slip and slide. If it doesn't hold here, we have a slip and slide to the 10,000, 6,000 area, just because the markets themselves are potentially, you know, it could go down. But I really feel from an economic standpoint that that Bitcoin is, you know, it's digital gold. And so you could go through and you could really kind of use this and for your advantage. If you guys have any questions, like I said, I'm going to be starting to do this 3 times a week. Forgive me for my inability to really speak well. That's why I like bringing Rafi on. If I can bring on people who communicate better than me, it will at least make them shine, right? It's almost like when you have something tarnished and then you put something shiny next to it. It doesn't even need to be that shiny. But as long as there's next, so I would consider myself more of the tarnished guy. But I do know my charts well. I've been doing it for years. This is how I make money. And so I just want to point this out here on Bitcoin. Let's check out, let me pull up Ethereum here for a second. Here we go. Ethereum, that's why. UST. Ethereum, the way I'm looking at this now, I told everybody who we were talking to, I said, look out for, why didn't this keep? And Chris, if you're watching this, I already checked my levels and I did my homework on these. So in case you ever go back and you watch this, I already know these levels really, really well. So Chris is one of my coaches. I have a few coaches, but he's my primary coach. He yells at me, make sure I'm doing what I'm supposed to do. No matter how good you are at something, it's always good to have a coach because they are a third party that can look at your mistakes and go, you're not doing this. So whatever you do, make sure you always get a coach at something. As you guys can see here, I actually picked this junctional point. Brinks will Brinks and Crypto Bull, where I will have on here sooner than later. They were actually on calls with me personally, where they will vouch that I did talk about 10,000 or 1,700 area within Ethereum. It was actually more right here. So this is the other one. I forgot. It somehow deleted all the other ones that I did. Sometimes what happens is I feel like I put these marks in on the TradingView, but TradingView, they're actually a fairly good company when it comes to this stuff. So this is the other one that I'm looking at within Ethereum. Ethereum, I could see us coming back. We need to make sure this 200 period moving average, as I'm looking at it, we need to make sure that we clear this. So it needs to clear it, and then we need to see some stability coming in on it and moving. For example, like if you look back when the markets were moving right here, when we had the huge sell-off, right? And then we saw all the SMAs start to come in here. We want to start to see on a daily where it starts to find support, right? And then once we start to see some higher highs in the market finding support on the 8 moving average, then this we can see some stability. And that's what we're looking for. So we want to see, we have the 8 climbing down quickly here. And if this stays in this area and we start to see this move in this area here, this is something that we're definitely looking for. Also, when it comes to the XRP, I know this is nuts, but XRP here is, I know, another protocol that a lot of people know about. XRP, Litecoin, they are good protocols that I like looking at. For me, I think they are a good investment for myself. They're big protocols, but I feel like they're at good discount. So right here is a good little area. We'll see what happens. And then also another area that I like for Litecoin, or not Litecoin, excuse me, XRP. That's this area right here, the 2016, the 21 cent through the 16 area, as well as the 22 mark area. I like this area are strong, fairly strong areas. Again, it's not financial advice, it's for educational and as well as entertainment purposes only. My biggest thing that I do look for is simply is the 8 moving average starting to show some strength on it, because ultimately this is one of those things that I think will help and ensure people to have a good area to be able to look at. There we go. Boom. Wow, this is really weird. I cannot post certain things. On TV. How do you do this on down? Okay. So, all right, guys. Well, this will conclude everything that I was just showing you guys. So I did Bitcoin, I did Ethereum, XRP. Let's do Litecoin here real quick. Where's Litecoin? This mark. This was one of the marks that I had placed in. And then the other one, here it is. Here we are. And then clearing this area are nice areas to maybe look at. And then, so this one right here, not so good. If we do see this fall even more on Litecoin, we could see another retracement back down to here. And this is all if we see the markets turn on, because we've seen that the Bitcoin we've seen that Bitcoin has been following the Qs or the NASDAQ composite. And so with that, we can definitely see the market starting to correlate with it pretty strong. So if we see the NASDAQ continue falling, it's one of those things that we want to be mindful of. Give me one. Let me pull that up here real quick. I should just leave the Qs. This is not the one. Forgive me. I normally have my own setup here for certain things. So I'm actually starting to use, I normally use TradeStation, or not TradeStation, I normally use Sierra charts. So for myself, as a professional trader, and I thought I had put dollar, Dow Jones, US index. It's the NASDAQ. I'm not 100% sure if this the NASDAQ. I believe this is. Here we are. Yeah, this is the NASDAQ. I apologize. Here you guys go. So here's the NASDAQ. So we have been following the NASDAQ pretty well for Bitcoin. If you kind of put the NASDAQ and Bitcoin together, you'll see that it correlates really, really well. When I look at the NASDAQ, if you look at 2008 drop, this is really where it, 2008, this is 2008 drop. This was the 2000 and 2002 tech bubble drop. So when I look at certain areas, for me, I try to see, now again, this is worst case scenario if things fall apart. These are certain areas that I'm looking at to gauge which way where the market might be going to. This is my macro view from a technical standpoint. So when I'm looking to trade, these are these areas that I say, because our biggest thing is our risk to reward, right? We want to make sure that risk to reward are offset right. That's the biggest thing, right? We want at least a 4-to-1 risk to reward. So if you can get 1,000 to 1, even better. But that's crazy talk there. But who knows? You never know what happens, right? Especially when the market really starts to move. So when it comes down to it, the NASDAQ, as I'm sitting here looking at this, I see that the 5,000 mark here could be something that we could drop to. Now, this is insanity, because if this was to happen, we're talking global catastrophe here. But we know that that's happened before, and something we kind of want to be prepared for. Something that we might happen. Now, we are 5,000 points away from that, but it's something to be looking at. Right here, as we can see, we came and tested this area here. This right here, it looks like a nice. And I know that Apple has also a gap right in this area as well. So it's one of those things that we could sit there and look at it. And additionally to that, and I apologize, I'm having a lot of people contact me right now on my phone, so forgive me for that. Right here, as you guys can see, is another junctional point on the NASDAQ. We can sit there and look. And then, where else is the other one? Right here. Nope. Here we are. Here's the other gap area. Bob Dunn, I want to thank you for teaching me how to look at the gaps. Right here, we can see them come through here. So I believe that the markets really try to go through and find and fill gaps. So we very much could see us fill this gap here on the NASDAQ. Again, I'm roughly looking to see if we do have a major sell-off within the markets, and we do see just all hell break loose. These are certain junctional points that I'm looking at really to really gauge where the market might turn around, where we see major buyers and sellers step in. Now, if I look at Apple, and I like Apple because Apple they are a juggernaut when it comes to the market. They are nobody to mess around with. They are one tough cookies when it comes to sticking around as a company. Pull them up here real quick. Here we are at daily. When I'm looking at, and also guys, if you're listening to me still, I'd love it if you guys were to like and subscribe here. Go through and look at some of the stuff that I'm doing. Maybe even put me on your Facebook page. Should be cool. But you can see here that we have a major gap right in this area. So this is kind of roughly the same area that the NASDAQ is sitting, that it could drop down to, right? It was, we were sitting at 180, and to cut this in half would be about 80 points. So this I could see Apple definitely not be one of the first ones kind of to buck the trend of down. I can see they are a strong company, so it would be something to be paying attention to. Apple, Microsoft, Facebook is another one. Tesla is another one. But I do like looking at Apple because they have so much money and they're a smart company. They have a lot of money in cash, and so they can go through and really pick the bottoms for themselves, right? So it's one of those cool things that we see right here, as you guys can see. Give me 1 second. This area right here is another area that I could see us coming around and bouncing off of. Some people like to go through and they wait for these levels and they go and they make 10%, 15% off the dead cow bounce, right? People will do this just simply because it allows them to be able to make some extra cash. Small risk, big reward off the bounce. So I'm gonna point this out here as well. Oh, here we go. This is not the one. Forgive me. Presentation is everything. This is what I was trying to find. Here we are. Gap. What is it? Right here. There's another area here you guys could be looking for. See if the market comes around to this area. Small risk, big reward here. Sometimes you'll see a good little bounce, maybe even a 5%, bounce within the first day where it just comes up and it just explodes up. So again, this is not the futures in Apple, but it's still, and you do have a lot of gaps all over the place here. But the biggest thing is that these are junctional points that you can sit there and watch the market run to. All right, guys, it was a pleasure talking with you guys, and I just wanted to show you guys some of this stuff here, some of the stuff that I'm looking at when I'm looking to get into the markets, and stuff that I'm personally looking to kind of get into myself, just at low points going in, just dollar cost averaging. All right, guys, have many blessings, and I will see you guys probably tomorrow, and I'll probably start doing this on Monday, Wednesdays, and Fridays, which will be a good thing for most people. If you guys want to pay attention, please like, subscribe, check me out. And I will be doing this from Moonrock TV as well. Many blessings, and we'll talk to you guys soon.